If you've seen this video of me documenting my 2025 net worth, you know that my current investments include Singapore bonds, banks, REITs, and the S&P 500 index funds. However, I'm starting to question whether my portfolio is too concentrated. Here's my current allocations. I have a little over $207,000 invested, with 19% of it in bonds, 40% in the Singapore stock market, and another 41% in the US stock market. So geographically, my portfolio is exposed to Singapore and the US. In terms of asset classes, I'm invested in bonds and equities. So yes, I'm looking to diversify, but the question is, with what? I'll be completely honest with you guys, investing isn't something that excites me because of the uncertainty, and it directly correlates to my personality type as well. I just want a slice of the pie if things do go well, but if it does not, I would have backup plans for that as well. And in that same video, I did mention I was using a portion of my money stashed aside to experiment with individual stock picking. After a few months of doing that, it only confirmed what I had already suspected. I do not enjoy it. Looking at individual companies, analyzing the stock market, monitoring it, it's honestly not for me. And hence, I'm looking to experiment with diversifying through a managed portfolio alongside my current investments that I have already DIY. So dollar cost averaging into the S&P 500 monthly and everything else I will continue doing. I'm just adding this to my investment strategy. I'm approaching it with the same mindset I did with individual stock picking. Try it out for a period of time, then reflect on the experience, keeping in mind that short term, I am not expecting any gains from this portfolio because investing is a long-term thing. And yes, I know that a managed portfolio has higher fees as compared to the DIY approach of picking ETFs directly. I want to document this journey transparently, sharing how I honestly feel in contrast to my other investments that I'm still going to continue doing. Because for sure, there are pros and cons when it comes to investing with a robo-advisor. And the timeline I'm giving myself is 1 year. For full transparency, after discussing this with a partner I've been working with on the channel, I decided to try on StashAway's platform. I've chosen to go with the general investing portfolio by StashAway to keep risk constant for the long term while maximizing returns through the different economic cycles done via StashAway's investment framework. If you'd like to read more on this, I'll put a link to the article down in the description box below. But basically what I'll be doing is that I will choose a specific risk level starting from 6.5% being conservative all the way up to 36% being very aggressive. And depending on what I've chosen, the assets in the portfolio will vary along with it. So I've chosen the 22% risk index because exposure to the US markets makes up less than 50% of this portfolio, which was what I wanted. And it also provides some exposure to commodities, particularly gold. I'll show you guys in detail later what this portfolio will be made up of, but in terms of fees, StashAway fees works on a tiered basis depending on how much money you have with them, and it ranges from 0.2% to 0.8%. Let me set it up right now and bring you guys through what the entire portfolio is made up of, and every single month how much I'll be putting into this portfolio for the entire period of 1 year. Let's go into that. Alright, so the screen recording you see over here will be exactly what I'm looking at on my phone. Let me just open up the StashAway app, press on create, and I will see the general investing powered by StashAway. As I mentioned earlier, I can choose the different risk levels starting from 6.5% being very conservative all the way up to 36% being very aggressive. I'm going to pick 22% because I don't want to get so much exposure to the US stock market, and I will be able to see the breakdown of this as well. So equities, I have 55.3%, bonds 34.9%, others at 8.8%, and cash equivalents at 1%. If I expand this, I can also see the different ETFs that they have picked and will be investing my money into. I will have some exposure to gold as well. Yes, so this is what I wanted to show. In terms of geography exposure, US makes up less than 50%, which I mentioned earlier as well. Japan 10.9%, India 4.4%, France 3.8%, and others at 32.2%. I'm going to set this up and invest via cash, but you can do SRS if you want to as well. And something new is their linked bank account. So previously when I was using their platform for the simple guaranteed portfolio, I did it via bank transfer, and that took a few days before the funds arrived to StashAway, but I believe this will be faster. better. Let me just try this out. Okay, so $100 a month, and it will start from today, 24th of March. Every single month for 1 year, $100 will go into this portfolio, and it'll be automatic after I set this up. So let me log into my iBanking first. All right. And the e-gyro arrangement is done. So every single month, Stashaway will take $100 from my bank account and invest into this portfolio, and I'll keep you guys posted. Wow, this is really easy to set up, but okay, that's done. I will update for this portfolio in the 3rd month, 6 months, and 1 year mark. If you would like to follow along on this journey, subscribe. I'll create a playlist for this particular experiment. I basically just want to test and see how it feels because I thoroughly enjoy not having to look and be so hands-on when it comes to my investment. I am an affiliate partner with Stashaway, so if you want to use their platform, using my link down in the description box below, you'll get your first 6 months of fees waived off if I'm not wrong. But more details, you can find it down in the description box below. I think just one last thing to close off today's video. As always, with whatever videos that I've put out on my YouTube channel, it has always been to document my money management journey, how much money I make, how much money I invest, and how I budget monthly as well with my money diary series. You guys know, if you have followed along long enough, you would know. At the end of the day, do not take it as financial advice. I really just want to experiment and see how it feels doing this. It might not be the best approach, to be honest. If you can be more hands-on with your investments, there are alternatives available out there. But for someone who just wants a hands-off approach, this is the way I'm doing it, and it's better than not investing at all. So follow along on this journey. I will always be documenting whatever I'm doing with my money as transparently as possible. And if you would like this kind of content, subscribe, follow along. You can also join my Telegram channel that I've recently created to connect a little bit more personally. But if you have any questions, as always, my Instagram DMs are open, or you can leave it down in the comment section below, and I'll catch you guys in my next video. Have a great week ahead. Bye-bye.